Okay, so let us illustrate the concept of splitting of gift. Okay, a tax minimization scheme which is done by spreading the gift over numerous calendar years to avail of lower tax liability. Is it A, spread out method, B, donation of life insurance, C, splitting of gift, and D, void donation? Our answer obviously is splitting of gift. Okay, take note that the exemption per calendar year is equivalent to 250,000 pesos. Okay, so you can split your gift into 2 or more calendar years, okay, so that you can avail of this exemption. Okay, say for example, okay, so our answer here is letter C. Your bachelor client, a Filipino residing in Quezon City, wants to give his girlfriend a gift of 400,000 pesos. So obviously, it's more than 250,000. He seeks your advice for purposes of reducing, if not eliminating, the donor's tax on the gift, on whether it is better for him to give all of the 400,000 pesos on Christmas or to give 200,000 on Christmas and the other 200,000 on January 1, 2022. So in this case, there are two separate calendar years, 2021, and you can avail of the 250,000 exemption in 2022. So you have to advise, okay, in order for your friend to minimize or eliminate the exposure of the said tax, particularly donor's tax, to split the donation. Okay? So, in this case, it would be better to split the donation to totally relieve the donor from donor's tax. Okay? So, you can uh, donate half of the 400,000, so that's 200,000, okay, on December 25, and 2021, and the other half, 200,000, on 2022. Okay? And obviously, 200,000 is less than 250,000 exemption. So you're going to file for donor's tax computation purposes, but you do not have any tax due because it's not more than 250,000. And as to the filing, again, pay as you file. That's the rule. And you have to pay within 30 days, no? 30 days from filing. There is no extension, unlike in estate tax. Okay? On July 18, 2022, Mr. De La Cruz gave a property with fair market value of 550,000 to Lester, a legitimate son, and Jennifer, Lester's bride, on account of their marriage celebrated on July 19, 2021. The donor's tax payable is how much? So we have here 550,000, which is more than 250. So deduct, okay, the exempt amount of 250, then multiply this by 6%. The so-called net gift multiplied by 6%. So our answer is 18,000, and this is the solution. Okay, take note of this exemption. Okay, then multiply this by 6%. You have here 18,000 donor's tax due. Another problem on February 25, 2022, Mr. and Mrs. Salomon, okay, donated their conjugal. Okay, so take note for husband and wife. Okay, KKB, kanya-kanyang bayad. Okay, unless the property is an exclusive property, okay, of one of the couple. Okay, so in this case, the 500,000 worth of land will be divided into two. Okay, 250 on account of Mr. Salomon, 250,000 on account of Mrs. Salomon. Okay, one of them is getting married, which is prompted the donation. On June 9, 2022, they also donated to the child of Mrs. Salomon by first marriage. So they divide it by 2. 75,000, divide this by 2. Okay? So we have here 37,500. Divide this by 2, we have 250,000. on account of marriage more than a month after the donation. Finally, on December 25, 2022, they donated to the nephew of Mr. Salomon a building worth 750,000, 40% of which was co-owned by their kumpare. So this 750,000, okay, for purposes of determining the tax due of Mrs. and Mr. Salomon, okay, multiply this by 60%. Okay, this is on account of Mr. and Mrs. Salomon, and 40%, okay, will be on account of their kumpare who agreed to the donation. So the kumpare will also have a tax due, donor's tax due, 40% of 750 and less 250,000 exempt amount. So the net gift will be multiplied by 6%. Okay? So the donor's tax due on February 25 donation is, our answer here is 0. Okay? For each spouse. Why 0? Because the amount of 500,000 for Mr. Salomon and Mrs. Salomon will be divided by 2. Okay? So each spouse, so Mr. or Mrs. Salomon, okay, will have a gross gift of 250,000 each. Less exempt gift of 250. So the taxable net gift is 0. Okay? Therefore, there is no tax due. The donor's tax due on June 9 donation is how much? Our answer here is letter A, 250 for each spouse. So take note, this 250,000 will be accumulated, okay, to the subsequent donation within the calendar year. And this 250,000 will be for the total year. Okay? It will not be on a per donation basis, but for the total calendar year. Therefore, okay, 75,000 divide this by 2 is equivalent to 37,500 for each. Okay, for each. Okay? Mr. and Mrs. Salomon. Then you have to add the prior net gift of 250 less the exempt gift, 250. So the total taxable net gift is 37,500. Multiply this by 6%. So the donor's tax due will be 2,250. And this tax due, which will be paid, shall be deducted, no, as tax payment for subsequent or succeeding donation. So on December, okay, donation, how much is the donor's tax due? For Mr. Salomon, 13,500. Mrs. Salomon, 13,500. And how did we come up with that amount? The net, okay, taxable gift current is equivalent to 750,000 donation to the nephew. Only 60% is on account of the couple. And divide this by 2, so you have 225,000. The 40% is on account of their kumpare. Okay? So you have to segregate that. Then add the prior net gift. This is equivalent to the donation, initial donation of 250,000 plus 37,500. Okay? 37,500. So the prior net gift is 287,500 less the exempt gift of 250,000. So the total net taxable gift is 262,500. Multiply this by 6%. So the donor's tax due as of December, so this is cumulative, okay, is 15,750. But for the current period, okay, you have to deduct the tax payment for the prior gift, no? Less 2,250, so that the net amount of donor's tax payable or still due, okay, still due is 13,500. The donor's tax due for their kumpare on December 25 donation is 3,000. And this is computed by simply multiplying 750,000 by 40%, the share of the kumpare, less 250,000 exempt times 6%, so you have 3,000. Mr. and Mrs. Pinagpala, next problem, made the following donation during the calendar year 2021. Common property unless otherwise stated. That's the rule. So on January 2, to Maria, legitimate daughter, on account of her forthcoming marriage, 10,000 shares which are not traded in the stocks exchange. So take note, class, that if shares, no, valuation of shares, if this is traded in local stock exchange or LSE, or not traded, okay, there is a difference, no? If it is traded in LSC, okay, you have to value the stocks at the mean or average, no? Highest quote plus lowest quote, divide this by 2. Okay? But if it is not traded, okay, in local stock exchange, so you have to determine, okay, is this common share or preferred share? Okay? If it is a common share, the valuation will be book value per share. Okay? While for preferred share, letter P, so it should also be letter P, and that is par value. Okay? Par value. Now, in this case, it's not traded in the local stock exchange, and we presume that this is a common share, considering that what is given is the book value per share. So 50 times 10,000, that's 500,000. Divide it by 2. Okay, on account of Mr. Pinagpala and Mrs. Pinagpala, 250,000 each. Moreover, to Juana, on the same day, a family friend of the couple, on account of her birthday, 20,000. So divide this by 2. So that's 10,000. Okay, so on January 2, okay, we have 500,000 and 20,000. So that's 520 divided by 2. That's 260,000 each for the couple. On February 3, to Petra, a legitimate daughter, on account of her marriage on February 1, a piece of antique jewelry from capital property of Mr. Pinagpala. So this is on account only of Mr. Pinagpala. Okay? The fair market value of the jewelry was 150,000. So you don't need to divide this by 2 because it is on account of Mr. Pinagpala only. To Estela, legitimate daughter, on account of her graduation, a piece of land costing 500,000. Okay? Take note, class, with regard to land. Okay? This is higher between zonal value and assessed value. Okay? The zonal value is the fair market value determined by the BIR or the commissioner of the BIR. Okay? So it's fair market value. Okay? Fair market value. Okay? This is based on the determination of the BIR commissioner, zonal. And assessed value, it is the value of the land that as determined by the municipal or city assessor. Okay? So we have here assessor's office. Ibig sabihin, okay, this will be the basis in determining your RPT. Okay, just to give you an overview, we have here the real property tax. So for real property tax computation, if that is given in a scenario, okay, the fair market value for real property tax computation is known as the assessed value. Okay? While the fair market value determined by the BIR is the zonal value, whichever is higher, I should say, between the two. Okay? So do not be confused by this fair market value. Okay? The fair market value as determined by independent okay, actuarial or actuary, okay, is not to be considered in valuing a real property, particularly a land. So in this case, the fair market value for RPT, real property tax declaration at the time of donation, was 1 million. Its zonal value, and this is the fair market value determined by the commissioner or the BIR, is 1.2 million. So whichever is higher, it is 1.2 million. The piece of land had unpaid mortgage. So let me clarify the concept of unpaid mortgage. If this is to be assumed by the donee, it shall be deducted. Okay, but if this is assumed to be by the donor, it will not be deducted. Okay. Now, with regard to gross gift, only the 1.2 million will be added to the gross gift. But for purposes of computing the taxable net gift, you have to deduct 100,000. Okay? To Lourdes, Mrs. Pinagpala sister, on account of her forthcoming marriage, cash of 100,000. So divide this by 2. Okay? And on October 4, to Bantay Bata, an accredited non-stock non-profit organization. So there are organizations, okay, or institutions, okay, that are exempted. No? The donation to such institutions are exempt from donor's tax. Say, for example, we have Philippine Red Cross. Okay, so you have to go over and memorize these institutions, okay, that are granted or given the privilege. Okay, so as donor, you will not be liable for donor's tax. Okay, and this donation to Bantay Bata, 250,000, shall be exempt. To Belmont Shipping Company, a piece of land valued at 700,000. Okay, so divide this by 2. To Aniceto, legitimate son, on account of his forthcoming marriage, 200,000. Divide this by 2. Now, how much is the donor's tax payable of Mr. Pinagpala on January 2? Okay, so our answer here, class, is 600. So how are we going to compute for that? We have donation, 250,000. This is 50,000 shares, okay, as discussed a while ago. Or 50, I should say, times 10,000 shares. Okay? Is equivalent to 500,000. So on account of Mr. Pinagpala, divide this by 2. So that's 250,000. Now donation to stranger, the 20,000 donation, divide this by 2. And that is for 10,000. So 260,000 less the exempt amount of 250, you have 10,000 times 6%, you have 600 pesos. And this will be utilized as tax credit, okay, payment for subsequent donation. Now, how much is the donor's tax payable of Mr. Pinagpala on gift made on February 3? Okay, so on February 3, okay, our answer here is 45,000. We have donation to Petra. This is capital property of Mr. Pinagpala. So this is the jewelry worth 150. So you don't need to divide this by 2 because this is capital property of Mr. Pinagpala alone. Exclusive niya yun, okay? To Estela, 1.2 million, which is the zonal value, no? Higher, whichever is higher. Okay? So 1.2 divide it by 2, okay? And that's 600,000. And to Lourdes, 100,000 divided by 2, that's 50,000. So the current gross gift, 150 plus 600 plus 50, is equivalent to 800,000 on February 3. Do not forget to add the prior net gift of 260,000. Okay? And with regard to the 1.2 million land donation, okay, for gross gift computation purposes, you don't need to deduct the unpaid mortgage. But for taxable net gift computation purposes, you have to exclude or deduct the unpaid mortgage assumed by the donee. Okay? Exempt donation, you have here 250,000. And the taxable net gift is 760,000 times 6%. So this is equivalent to 45,600. Okay, 760,000 times 6%. Okay, less the 600 peso prior donation, okay, or prior donor's tax paid. Okay, so the current donor's tax payable or still due is 45,000. Okay, so take note of this. And how much is the tax payable of Mr. Pinagpala? Donor's tax payable on October 4. Our answer here is 27,000. Okay, so the donation to Bantay Bata is exempt, as we have discussed. To Belmont, 700,000 divided by 2, so that's 350. To Aniceto, 200,000 divided by 2, that's 100. So the current gross gift is 450,000 plus the prior net gift, which is composed of 260,000 plus 800,000 minus the unpaid mortgage. So you have here 1,010,000. Less exemption, 250. So you have taxable net gift of 1,210,000 times 6%. Okay, less 45,600. So the donor's tax payable is equivalent to 27,000.